Welcome back to Alberta Primetime. Our Monday Money panel is in now to debate another lending crackdown and to report our flat housing prices will not boom anytime soon again. Plus, acclaimed new pipelines will jack up the cost of fuel, inflation that will wreck our economy. So much to discuss tonight with Russ Ratwa, Senior Investment Advisor with Canaccord Wealth Management. Shafik Hirani is a Director and Senior Executive Financial Advisor with Investors Group, Calgary. And Brett Harris, Western Bureau Chief at Business News Network. Good evening, everyone. Thanks for being here.
Thank you. Good to be here.
Thanks, Jen.
It appears Federal Finance Minister Jim Flaherty is cracking down on loans to the self-employed. That affects Albertans perhaps more than other provinces. Nearly 17% of our workforce self-employed, yet home prices stagnant. Russ, let's start with the lending side. CIBC getting out of the stated income mortgage business. How tight do you feel money might get out there for either the self-employed or many of us?
I find that fascinating that CIBC would do that. I mean, it wasn't the self-employed solely that are responsible for the housing collapse. I mean, the speculators, as much as the financial institutions that bundled all these products together and sold them over and over again. It is just a shame that somebody is going to basically take the fall.
Brett, talk about what you're seeing on the lending side and the potential impact here in Alberta.
I mean, it's certainly going to have an impact on people who run their own businesses. They're going to end up paying a lot higher interest rates because they're going to have to go to the alternative mortgage side. But, you know, I think this is all part of that trend that we've seen from the federal government trying to keep the reins on this mortgage market so we don't get into the kind of situation like they got into in the U.S. And we've been seeing more warning signs. We've been seeing, first of all, the big bank CEOs saying recently that they're concerned that we're getting into a bubble situation or at least an overheated situation with housing prices here. So that's part of that. BMO Economics just came out with a report recently that said virtually the same thing, although I think they called it, they said it wasn't a bubble, but it was certainly a balloon. But I think the obvious trend is that prices have been overheated, particularly in the condo markets in Vancouver and in Toronto and even in Montreal. So I think this is part of that trend, and I don't think you're going to see the federal government let up on that. Unfortunately, as Russell said, you know, somebody's going to have to pay the price, and in this case, it's people who are self-employed.
And interesting when you mentioned some of those markets, because Albertans certainly not feeling like their real estate prices are booming at all, and yet we'll feel the impacts of any kind of lending crackdowns. Shafik, the federal government has fiddled with required down payments as well in recent years. Are they working right now for people as well as the economy?
Yeah, the federal government, what they did is they changed the required down payments from 25 to 20%, which is really an expansionary monetary policy. If you really look at the math, that allows people to spend more money. But putting restrictions on these income mortgages for self-employed people, that in fact is counterproductive, and that's more of a contractionary monetary policy. Yeah. I agree 100% with what Brett's saying. If these people now have to go to secondary lending institutions or non-traditional institutions, they're going to pay a higher interest rate, these self-employed people. So it's tighter now.
Economist Will Van Veld at ATB Financial has released a special report indicating Alberta has less than half the immigration needed to meet current housing supply, and that will drop to a quarter of what's out there on the housing market by 2020. Russ, the economy in Alberta seems to be so strong, yet the housing market here just flat. What gives?
Well, the interprovincial migration is also something that should be apparent to our government, to go into Ontario, to Quebec, to look at these economies that are not doing as well as Alberta and do some type of incentives or initiatives to bring people west once more. I mean, that will help that out level.
Brett, what's the consensus on where Alberta's home prices are? I mean, maybe we're just being greedy because most of our homes are still worth a lot more than they were 10 years ago, but still, ATB looks to be suggesting, I mean, they're throwing around years like 2020, no improvement.
Yeah, that's interesting. I mean, I think it'll be interesting to see what happens with the economy over the next little while. I mean, the Alberta economy, as you mentioned, is still booming. And while there may not be that net in-migration from international markets, there's certainly going to be, as some of these big energy projects ramp up, you're going to see a return to that in-migration from other provinces, people coming from Newfoundland, from from Ontario increasingly, because the economy is flat there. And I think, as you mentioned, I mean, there was a huge run-up in prices here, and it's going to take a little while now for that to whittle away. So I wouldn't be surprised if it's flat for the next little while. And actually, the real concern, I think, and I've heard this from some people, Capital Economics, for instance, has said we could see a 25 to 30% drop in housing prices over the next few years. That would be a major concern rather than just the housing market staying flat.
Shafik, another bit of numbers out recently. Alberta's employment numbers showing more full-time jobs than part-time jobs. The national employment rate just so stubborn to move. Still, what, if anything, can investors glean from these latest job figures?
You know, if you're Albertan, you got to be a little bit happy because the unemployment rate in Alberta is the fastest growing, and the employment rate is the fastest growing nationally, and it's up to 5%. So that's good news. Nationally, 7.6% is a little bit worrisome because now, if you look at the U.S., they've dropped from 10% unemployment down to about 8% unemployment. So nationally, there are some concerns, but Alberta seems to be fueling to the fire. The oil and gas industry is working out well.
Russ, these are the very kind of figures that make people shaky, still bearish on stock markets.
Absolutely. I mean,
employment numbers not where you maybe want them to be. Housing prices stagnant. You know, you look for all the signs that it's safe to jump back into stocks wholeheartedly, but it still feels so shaky, so volatile.
Well, thank you. It's basically corporations and governments trying to pass on the risk to the individuals, as always. I mean, that's good for the corporate bottom line, but again, individuals have to take the stick and run with it. I mean, we're not. That's the problem.
Next, a report that says new pipelines will raise the price of fuel for you and me, and the damage the entire national economy will suffer. The Monday Money Panel debates that in a moment. Welcome back to Alberta Primetime and the Monday Money Panel. A report by the former CEO of the Insurance Corporation of British Columbia, Robin Allen, claims new pipelines to the West Coast, well, specifically Northern Gateway, would raise the price for Alberta oil, and we, you and I, would not be immune to that spike. The inflation, he says, would shock us and the Canadian economy. Brett, sound theory?
You know, this one just doesn't make any sense to me, I gotta say. I mean, you know, if you just look at that argument in isolation, maybe it makes sense. But first of all, it sounds like an argument to not join the global marketplace because the price of fuel might go up. But what it doesn't say is that when the price of the fuel that you sell goes up, it's great for the Canadian economy. How many of those jobs would be lost if they didn't build a pipeline and they didn't have anywhere to sell all of that oil sands crude production that's expected to come online over the next little while? That's what's driving the Canadian economy. So I gotta say, I shook my head when I read this one.
Government revenues probably wouldn't be hurt too much by more global access either. Shafik, the study says the depressing effects of increased oil prices through more global access are not being factored into industry predictions of $270 billion in economic benefits from Gateway. Benefits versus negatives. We've heard Brett's opinion. Where do you sit?
I'm 100% with Brett on this one. I mean, $270 billion worth of net effects on the first report. Now there's a report saying that there's going to be additional expenses. I mean, there will be, you could argue that the oil is right now not priced into the rise. There could be a $2 rise over the next 30 years like the report suggests, but if you take a look at it, we need access to these global markets. We need access, and this pipeline does 500,000 barrels a day. It's a $6 billion pipeline. It'll have jobs. If oil goes up, that'll help Albertans with their revenues. It really will impact GDP in a positive fashion. We
know it's Enbridge that's planning this pipeline. Russ, how do people get in on this themselves as individuals? How do we make some money off it?
Well, to add to that, I mean, it's sort of if you're a business owner and you only have one client, which is currently the States. I mean, we don't even supply to Eastern Canada, and we certainly don't go offshore, which is critical. Taking advantage of this, I mean, when I'm talking to the individuals in the company, they want $80 to $100 oil. Once you get to 125, it certainly eats into GDP. $150, I'm told, we're in a recession, could cause a recession. So any of these flies in the ointments are just verbiage. I mean, the source, they are opponents of the pipeline. It's important to see pros and cons.
So what if you're believing in it? Is it Enbridge you pick? Is it one of their contractors? How do you invest and make some money?
Understand the investment you're in, understanding what their operating costs are. Natural gas, I'm told from my folks, is, I mean, they need $3 natural gas. Intermediates need 4 to 6 natural gas. I mean, it's at $2.50. I mean, so you might want to avoid natural gas perhaps, but the same premise for oil. You have to understand what the costs are for the operator, so there's no cut and dry answer.
Okay. You mean to speak to someone more knowledgeable like yourself, probably.
Ideally.
Brett, let's go around just quickly, starting with you, and ask what you're watching for this week.
You know, I'm watching Europe just about every day. Whether or not Greece comes up with another bailout deal, I think, is important. But beyond that, the question is even if they default, which they likely will do at some point, what impact does that have on the rest of Europe? Because that's going to affect the world. That could affect China. It definitely will affect the United States. And, of course, that will affect us. So I'm watching that story every day.
Shafik?
Yeah, like Brett, Europe is what all financial people are keeping their eye on. Domestically, there's 2 things happening domestically. Housing reports, the housing starts are out Wednesday. That'll give us a good idea of the growth in housing. And the finance minister, Flaherty's budget is coming out on Thursday. So a lot of people are keeping an eye on that one too.
Russ?
Certainly Europe. I mean, Greece is one thorn in the lion's foot called euro, and the Toronto Stock Exchange seems to be bouncing at a resistance level here at 12,006, so I'll be curious to see if it can bust through.
Will that continue, though? Is it the good first start to the year that maybe trails off the last 6 months?
The one thing I've learned about markets after all these years, all decades, is they don't like surprises. I mean, if everything's out in the open and we're dealing with it, the market's accepting of that. But if there's any more surprises that come out, that's when you're going to see the big hiccups.
Thank you for your time tonight, gentlemen.
Thank you.
Thank you.
You're welcome. Thanks.
Russ Dratwa, Senior Investment Advisor with Canaccord Wealth Management, in with us tonight. Shafik Hirani is a Director and Senior Executive Financial Advisor with Investors Group Calgary. And Brett Harris, Western Bureau Chief at Business News Network.